Today, I'm a 7-figure trader where I make anywhere from $50,000 to $100,000 every single day, with realistically about 1 or 2 hours a day that I look at the charts. But it really wasn't always like this. It took me about 2.5 years to make any money in the market, let alone be a consistently profitable trader. Plus tens of thousands of dollars and endless hours in front of a chart trying to figure out the secret behind how to become a profitable trader and how to live this crazy lifestyle. And even though in the industry, it's often to say that about 80% is psychology and 20% is technical, I totally agree. But for me personally, what actually changed my approach to the market and was able to let me scale was risk management. It's cool once you understand psychology, you figure out the trading, but without having that 20% of technical and risk management, simply won't be able to scale. And trust me, I know it might sound basic and it might sound boring, but without the risk management, this is not possible. Once I understood the importance of it, my trading completely changed forever. And this was honestly the most powerful concept that led me from level 5 to level 100 in a matter of 3 months. So I'm gonna share with you in this video the concept of risk management, how I use it, and how you guys can learn it from it and then use it so you guys can scale your trading. And for the first thing, you need to understand what is risk management. What is it? Why is it so important and why is it necessary, right? I can't just take a trade on the market, risk whatever I want and see what happens. No, that's not how this works. Same way how a business has a certain percentage that it allocates to marketing, a certain percentage that it allocates to employees, a certain percentage that it allocates to savings. It's kind of the same thing, but with trading, except you don't have to divide it into all these different factors. You just use risk management for a trade and that's it. You can't have random percentage everywhere. So what is risk management? It's literally what it is. You're risk managing your account. So you need to know that the money that you put into your trading account, that is your account balance. And based off of your account balance, you can't risk the whole entire account balance. That defeats the purpose of it. If you wanna bet $100 per trade, don't just deposit $100 and risk the full $100 because then you lose it, then you have to deposit again. You deposit what you're willing to invest into the market. So let's say $1,000, and if you're willing to risk $100, now you're only risking 10% of the actual account. This way, if you lose a trade, you still have a margin left in the account and it's healthy for your account versus risking 100% of it versus 10% of it. So risk management is you're literally managing the risk of the account balance that you have deposited into your trading account. Now, you might be asking, why is risk management important? And I'm here to tell you right now, without risk management, it's not gonna work. Impossible, it's not gonna work. It's like a business. If a business doesn't have a certain percentage allocated for marketing, a certain percentage allocated for savings, the business will go under because the financials aren't in order. Same thing in trading. You can't just risk one day $500. You can't risk another day $1,000. That's not the risk management. You have to have a strict risk management rule that every single time you take a trade, you risk the same percentage per trade. So when you have your P&L chart, and let's say you want to present it to an investor, so you can showcase your skill set, so you can allocate more funds, so that way you can manage more money, and then that's how you scale your trading. They need to see a consistent risk management on their account. Nobody wants to give you money to trade if they can't see that you're consistently respecting it and risking the same amount and making the same amount. They don't want to see their P&L go up and down and their money just fluctuate out of the blue. So now that you understand that, I want to let you know the main mistakes that the traders make with risk management. And it drives me crazy because if I would have learned this at the beginning of my journey, I would have saved myself, I think, about 1.5 years into my journey. So the first point is risk management is percentage-based system, not dollar-based system. So let me explain. So when you're gonna go take a trade, don't base it off money, base it off of percentage. So what does that mean? So earlier to the example that I gave to you guys earlier, if you have $1,000 in an account, don't think of it, oh, I wanna make $500 with the $1,000. Because when you look at it in a percentage-based system, you have just made 50% of your account. And a lot of people wanna do that every single day, every single other day, once a week, once a month. And think about that for a second. 50% a day, 50% a week, 50% a month. Those are all unrealistic numbers. It's not going to happen. Now, the opportunity is there for you to be able to do that, but it's not something sustainable. It's not something that you could do month in and month out every single month. So risk management is a percentage-based system. So now you tell me, okay, I wanna make anywhere from 8 to 10% a month. I'm like, you know what? That is a fact. Anybody can do that. It's something accessible and consistent. Now, I know 8 to 10% a month doesn't seem like a lot of money on $1,000, right? That's about 80 to $100, which is okay. But now take that same 8 to 10% on a 100K account, 200K account, 300K account, and so on and so forth. Now the numbers have changed. Now you can be making on a 100K account anywhere from $8,000 to $10,000 a month. You can leave your job and you can trade full time. So you see how now the same percentage-based system works, but on bigger accounts. And that is where it's meant to work, on bigger accounts. Let's be honest, guys. We're in the financial market. We're here to make money. You can't really do a big impact with $1,000 in the market. You have to either get funded or allocate a lot of funds. And that's where I got literally all of my success with funding companies, because I got funded 100K and I made about 27 to 28% in a single month, and I got my $28,000 payout. But over the course of about 39 days, I made 28% on a 100K account. Now, I would have not made that same $28,000 from $1,000 account. It's not realistic. So the biggest mistake that people make with risk management is thinking that it's about money. It's not about money, guys. It is about percentage, that once you take that percentage and you put it on an account size, then that equals to money. So when you're gonna go take your next trade, think about how much percentage am I going to risk, not about how much money am I going to risk. So now you may be asking yourself, should risk management always be applied in the same way? And to be honest, the answer is depending your objective. What are you trying to do? Are you on a personal account? Are you on a funded account? Are you on a side account that you don't really care about? So I'm gonna set you 3 different examples on different risk management approach that you should do depending on the approach you should have. So the first risk management approach is the conservative approach, where it's risking anywhere from 0.5 to 1% per trade. Now, I know this might seem like a little bit, but again, keep in mind big numbers. Keep in mind $100,000, $200,000, which realistically, it is extremely accessible to anybody out there as soon as you have the skill set. So you risk anywhere from 0.5 to 1% every single trade. And this is what I personally recommend to traders taking trades on the lower time frame, simply because you're getting in and out of the market more frequently. So you can see yourself taking more amount of trades, and you don't want to be taking a lot of trades on high risk. So this is where you lower your risk, but you can take more trades, where then inevitably it can make you more money. So the conservative approach is meant for lower time frame traders that are executing more trades, either 1 to 3 trades a day, or even 1 to 3 trades a session. My second point is my recommended risk management, which is simply what? It's an industry standard, I'd say, which is anywhere from risking 1 to 2% per trade. Now, the key to this is once you pick the percentage, you stick to it. You don't go up or down when you're making money or you're losing money. For example, let's say you decide to risk 1%, and then you take 5 wins in a row with a 1 to 2 risk to reward. You have now made about 10%. Now you feel like you're the king of the world, and now you want to up your risk to 2%. And at the moment that you up your risk 2%, you lose 2 trades, let's say. Now, it took you 5 trades to make 10%. And with 2 trades, you have simply knocked down 40% of that work. Versus if you would have stuck to risking 1%, you would have only lost 20% of that. So you'd still be up 8% versus only being up 60%. And this is key, because my recommended risk management is 1 to 2%, and whatever percentage you choose, you stick to it and you do not move it for anything until the end of the month, which I'm gonna explain a little bit more on that, which is my personal risk management, which is the next topic in this video. But recommended risk management is anywhere from 1 to 2%. And then last is obviously the riskier risk management, or what I like to call it, you degenerates, right? A lot of you guys out there like flipping the accounts. A lot of you guys out there like taking the high risk, and it's okay. I do it all the time on my personal account or side account that I don't really care for. And it can be anywhere from 3 to 5% of your account. And even then, that's still not enough for some of you guys, but think about it. If you risk 5% of your account and then you get a 1 to 3 risk to reward ratio, you have just made 15% on 1 trade. That's more percentage than any bank out there makes a year. And you're literally making that on 1 single trade, which can play out in 1 single day. So the riskier approach I recommend is done on a personal account. So that way you don't breach any rules on a funded account, or it should then get done on a small flipping account that you really don't care for. And these 3 different types of risk management approaches is what I do myself. The conservative approach, I really don't do as much anymore because I feel very confident with my set and forget strategy. I've been profitable now for about 6 years, and my students are getting results every single day. And when you predict the markets for about 5 years, you get more confidence. So you could, you're willing to risk more. I'm more in between the recommended and the risky side of the risk management. And let me explain to you how I do it. At the beginning of every single month, I risk a percentage that I'm going to choose for the month. So let's say I'm going to risk 3%. I risk 3% for the whole entire month and I stick to it. Doesn't matter if I lose 5 trades in a row. Doesn't matter if I win 20 trades in a row. It does not matter. I use the same exact risk management for the whole entire month. That way the P&L at the end of the month, I have a stat. I don't have a fluctuated risk management approach because I can literally risk 3% on month 1 and on month 2 risk 1% and win and lose the same amount of times, but I have the same risk to reward ratio, so the P&L chart balances out. It's a little bit more complicated. I can make a video on that as well, but it makes sense to the investors. And I only risk 3 to 5% on certain months out of the year. And that is November, December, January, and February, and maybe March. Those are the months statistically that I've seen in my trading that I have the best results. And that is where I decide to risk a little bit more versus not. Because we all know during the summer, which comes August, June, July, the markets are a little bit slower. And I want to make a lot of money at the beginning of the year. So when it comes to summer, I don't have to take a trade and I can have lower risk management and it not bother me because I know I killed it at the beginning of the year. And this is something that has taken me about 5.5 years to kind of figure out. And the information that I've given you in this video is honestly enough to change your trading completely if you use it the right way. Or to be honest, to at least stop losing money. Because the goal as a beginner trader is not to make money right away. It's to stop losing money. 99% of traders lose money. And if you could be that 1% that doesn't lose money, you're destined to succeed. Because if you can figure out how to not lose money, I can guarantee you can figure out how to now make money. And the best way to achieve how to make money, you need to have a winning strategy. Profitable strategy that can lead you to that success. And if you want to learn the same strategy that I use every single week that I get on a call with my students that leads hundreds of them to make anywhere from $1,000 to $1,500 a week as a beginner 7-figure trader, just click the link in the description below. There's a video there that explains to you what 5.5 years of trading led me to and how I figured out the secret formula of a profitable trader and how now students in the first 3 months of using the 7-figure strategy, they make anywhere from $1,000 to $1,500 a week using the 7-figure strategy. So if you want to know more about it, the link in the description below. I hope this video was very useful for you guys and you guys are able to now take this risk management approach and stop losing money. And now you guys can apply a profitable strategy like 7-figure and you guys can now start making money and become a profitable trader. So appreciate you guys watching all the video to the end. I'll see you guys in the next video.